Hello, 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 everyone. Mike Arnold's here, co-founder, Pat Trading Partners, along with Bob Iacchino. Who's not here today? He was here the last two mornings. Might pop in tomorrow morning also. And why? Well, we'll get to that in a second. If you're new here, please do consider subscribing, ring that bell, and hitting the like button. Longer term subscribers, please come back after the video is over and leave a comment and help keep growing the channel. Good afternoon, Amit. How are you doing? Jake the Snake, Crap Fest price action day. It was pretty much a distribution day. Chop Fest. Chop Fest. So, yep. And remember, you only get about 20 something percent of days that are strong to moderate trending price action. More often than not, you have choppier price action. Good afternoon, Davey. Choppy days are the worst. When I start seeing a choppy day, especially when you get market internals agreeing with the chop fest, generally just sit on my hands. There's just nothing. I'd rather just wait. I mean, I know plenty of people, professional level traders, that once it's a chop fest day, they just, because they're mainly futures traders, they just pack it in. They just say, fine, I'll make all my money in, 4 to 5 days a month. You just got to be around for those trending days. And then you pile on the trend. It's been a while. I've been able to attend the live stream versus watching all the recaps. Well, I'm glad you're here. Hello, Eric. I'm glad when everybody shows up. I really like when people can attend the live stream. And I appreciate you watching it on demand when you can't. So, why will Bob possibly be here tomorrow if his schedule does allow? Because, well, he's coming for the Barkin speech. I mean, we had more Fed speaks today. Market's still just shrugging off. I mean, they're still stressing. Again, 50 could be 75 in September. Market's shrugging it off. Could go longer than the market thinks. Market's shrugging it off. Let's just go buy calls and crap companies. It's buy calls and crap cos. Retail's going to get their butt handed to them again. It's going to be fascinating. But you got Barkin speaking at 7. Not that it's really going to matter because the market will shrug that off. We got non-farm payroll Friday. First Friday of every month. So we'll see how that comes in. Again, we can just discuss that tomorrow morning. But don't be caught off guard. That's 1 hour before the open, 7:30 Central Time. So please, that's going to be the big thing tomorrow. And then you got the rig counts for crude traders. Crude getting sold today. And then you got consumer credit change in the afternoon. But pretty much after 7:30, you don't have anything else that's going to move stocks that's coming out report wise. So it's either something else breaks in the news, or I don't know if any other Fed speaks tomorrow later. There might be one. They've been rolling out the Fed speaks repeatedly, trying to tell the market that, hey, you're underestimating us, but the market says, let's fight the Fed. Let's fight the Fed. Yeah, Jake. I mean, especially with the futures. You can always find even stocks that are trending, though, if the futures are choppy. But you know what? You can try to play some support resistance. I'd rather just trade when it's easier. And I'll show you with that double that triggered. And then, this is when I like to just unwind it early. We can go over that. Can you speak on your thoughts on the recent price action on the indices? What, besides a bear market rally, and now we're still trying to put in a minor topping pattern? Sure. By the way, probably going to be a shorter session tomorrow afternoon. I'm recording before this the Jim Iorio Futures Ed podcast, so you'll have to tune in to some of my for next week for some of my longer term price action stuff. But I'll be pretty much talked out by tomorrow afternoon. So just keep that in mind. It'll probably be a shorter session tomorrow. Hello, AP's World, but I will be here tomorrow morning. I missed you, Coco. I always miss you. Finally, my penny stocks portfolio up from minus 84 to minus 81. You better lock in those profits, Dark Screen Sleep. Again, I'd be careful on the next downturn. What do you think of Coin BlackRock partnership? Well, you don't want to know what I think about BlackRock besides it's complete garbage. Anything BlackRock touches, yeah, they make a boatload of money, but they leave crap behind. Don't get me started on BlackRock, another company I will not own. Let's go big on China, all this ESG, all this other stuff. Crap. Utter crap. Mixed market today. Amazon still rolling versus Walmart down. Tesla just up a bit, like Microsoft, Apple down a bit. Uh, Oil down big because you got oil getting slammed. Other than that, just a very mixed market. Overall choppy. FOMC still this edging back up to that only that 25 basis point hike. And they keep stressing 50 at a minimum. So we'll see. We'll see who blinks first, the market or if the Fed comes in and only does 25% in September, which then that would obliterate their credibility because literally they've been talking up 50 and possibly 75. Yeah, they are data dependent, but they also said today, who was that, Mester, uh, said today there's got to be multiple months of, inflation coming down before they're going to blink. So multiple months. By the way, this line's wrong. Just pay attention to this 40.51. So we're pretty much at neutral gamma. See if you come here. We'll get to that in a second. AMC was down after hours of keeping an eye on the apes. The AMC finished its double. That's why you never know. Hey, AMC hit its double full target. That's why you can't try to second guess which ones are going to win, which ones are going to lose. You got to play the probabilities. By tomorrow, there's not much. I mean, I'll check in on Western Digital. I'll peek at DraftKings even there. But not much that I'm looking at tomorrow morning. If there is something that anybody else wants to check out, let me know. Here's what I'm talking about. 40.51. We're at 40.52. We're at neutral gamma. Let's see. The monkeypox rally. Yeah, wasn't that now what is the deal? Can we stop? Do we really need what? What's the thing that Biden did with monkeypox now? Really, for 6,000 monkeypox case? Can we stop with this nonsense? Can we just stop with all this? So generally, when I see this kind of stuff, we hit the first target, and you're going to lower your stop. When I start seeing this back and forth kind of stuff here, with especially making each spike down, making lower highs, I just try to wash the trade. Just wash the trade at roughly the entry, because if it's going to be in a distribution day, there's not going to be follow through, and on a shorter term time frame like this, I don't want to hold it overnight to try to eke out the last things. And by the way, if you're trading it like on a 5-minute basis, which it's the close right there, which wouldn't have done it for me. I mean, that was a 15-minute close. There's a 5-minute close above there, but it was an hourly pattern, so I really need an hourly close. But it's just a chop fest, and there's no way I'm going to run something like this overnight in these markets to eke out a little bit of profit. Especially when we went into a clear path, we held that the breakout level and hitting that first target, and then it turned into a chop fest. So it was that's just wash the trade for me. Even if I need to take a slight loss. I'd rather, instead of carrying stuff with risk into this kind of day overnight at market tops, just waiting for a rollover play, thinking I'm watching just overnight, I'm going to make this probably a quicker session to 41.28. I need a close below that. That's into a clear path, but you got the rotation zone and a harmonic right here. So that's the thing to the downside. The upside, I'm still keeping the same harmonics. Even with this pausing bar, they're close enough. And these are the minor levels going into tomorrow morning. 41.81, 41.92, and then the whole 100% of retracing the move is I'm going 4,200. Fed's not doing shock and awe. I pretty much guarantee that for September. They're not going with, if they were still going to go more aggressive with fighting, they'd go 75 at most. I think literally with all their speak, they're pretty much it's a 50 baked in, unless something really happens strange with the numbers. Well, the market conditions, you're bringing up good points. The market conditions, I mean, the monetary stuff, I'm not talking the Fed, but the overall price action, the way everything's trading has gotten technically looser. So, I mean, that's what's interesting. So it actually is giving the Fed more wiggle room because they might have to, if they actually knew what a neutral rate was, but I actually think it's tending to edge up higher based off this. It's loosey goosey price action and also loosey goosey. The junk bonds aren't trading anywhere where they should be from even a recessionary standpoint or tipping into a recessionary standpoint. Money policy is still very, very loose. Now, it can take a while for these rate hikes to catch up, especially with the banking system. But I think they're going to still err on the side of going a little stronger and quash retail's dreams. Again, you have some of this call buying frenzy is back. I'm just going to talk a little more in the macro. But if you start looking at the internals of call buying across the broad spectrum, it's hitting some of the peaks, or not the peaks, but some of the frothy levels from last year when we had all the crapcos just rallying and people juicing it up with the massive call buying. And we're starting to see that again. And a lot of these flows, there have been some CTA flows and some additional money being put to work that was sitting on the sidelines, especially by CTAs now and funds trying to chase returns. But also, you've had a ton of retail pouring into this move. And retail's generally wrong. So, the challenging thing with bear markets are the challenging thing with bear markets is timing. That is the challenging thing. That's always been the hard thing. I've got to just make sure I'm on the right low here. 40, 40, 81, 40, 80, 50. That's technically the right low. I'll just update this while I'm there. It's not going to matter that much, but that's the technically correct level. 4184, 4196. Nothing changes to the downside levels I talked about. Hey, Pedro, I finally got successfully out of my Beyond Meat short that I let myself get trapped in. We'll grab Beyond Mist. Let's just peek at that. Beyond, and I can't even spell it. Beyond got stuck sitting now, not down as much as I thought. Actually hit the stop reduction and not quite that second double target, but not yet near a stop level if you didn't get out of stuff up here. What's interesting is this is technically a head and shoulders, but it would be, except it reverses too much. I believe it reverses too much if I was correct. I measured out a lot of things this afternoon, and I'll just show you. Just for the people, I know there's people trying to learn this pattern too. Head. I looked at a few of these. I don't remember if this one specifically, but it has not broken the neckline yet. It looks like it's going to with this earnings stuff, but oh no, this one did work. This one does work. Unless, yeah, it does. There was another one I was looking at. Sorry about that. So you want at least the first and second targets to be in the move that started it. So this one does work. So if this did trigger, it would negate this. It would get out of if anything remaining on the double bottom and then go back down short. Why? Because the first target's beyond the stop reduction at this point. So that's what I was thinking also. Let's peek at AMC because AMC was trading lower, but AMC is another one that hit the double target right there finally. After this was the trigger, by the way, I just wanted to review this pattern. This was the initial trigger. If you looked at this, a lot of people were wondering if this was a trigger. I forgot about this day, but this was not a trigger. You cannot trigger on a red. This was the one, it never stopped out, and then running up to the targets. Eventually took a long time, and another little mini right there. But that one was over. Let's see. I mean, it's pouring into this. We're back in party la la land. I mean, just look at True Panion. Where is net? Yep. Wow. Cloudflare. How much of a beat was it? Oh, they eat zero. So they did beat on revenue and earnings, but that's ripping higher. Here's another one. This earnings report is an absolute nightmare. This was, and look, this was an absolute nightmare for Trupanion, and that just like, oh, let's just buy it all back. This is the mode we're in. Trupanion, this was an absolute joke. Yeah, they beat on revenue, but their expenses are skyrocketing. They outpaced their revenue gains with expenses, and they surprised the downside. It was absolutely disastrous, and that just ripped. So we're still in that kind of market right now with the bounce back. By the way, if you're interested in Trupanion long term, statistically, we should be back down to 38. I'm expecting this to be trading 20 within the next 6 months. Mike, did we hit the top of the downtrend line on the Qs? What you drew a few days ago, price action could break through, but odds should favor a pullback. No, odds should favor a pullback now with where we are with cycles, but I need confirming breakdown. Yes. Here's what I drew the other day. This little dueling thing right in here. So even if you got a slight push higher, now you're trying to eke out pennies to risk dollars. Keep that in mind. Once we get up to these elevated levels with cycles pinned to the top on the daily, pinned at the top on the 4-hour, pinned at the top on the weekly, can it continue? Yeah. But we're hitting this very key level. By the way, this, I didn't take that off from before because we broke to the upside. This, I mean, I'd be trying to eke out. You're virtually there. 325. And you're closed at 324.25. So I'm not trying to eke out 75 cents to risk a bigger pattern. By the way, this is another potential double top. Now, you can always wait, but even to this, see, let's say this triggers. Am I going to try to eke out even a buck to trigger the double top, risk this amount to make that amount? No. So if I was trailing, I'd be trailing rather aggressively at this point. And yes, can it continue higher? Could we keep going through tomorrow? Yes. But then I'd keep a really tight trailing stop. This would not be the point I'd be initiating a lot of new longs. Why? Again, downside risk really outweighs even a return just to the daily rotation zone, which wouldn't even be a super bearish move. You're risking like $5 to make, again, if you're trying to keep a wider stop, make a buck risking 5. No. So that's where we don't have any confirmed rollover on any time frame, but that's where we sit. So going into tomorrow morning, non-farm payrolls, especially if the market starts selling off, I'm watching for this double to potentially trigger and then the pullback move. If we still edge up, next target is just overhead. Sure, Davey, end phase. I still have the same targets as before. If it ekes out anything higher, you can put on a short. If you're really trying to eke out something a little more, I do the little mini harmonics. There it is. You just might as well do this one right here. You know, but that's just your overhead area right here. So if you did eke out any more, let me go with the reverse actually. I'd be using about 301.90 to 303.50 is my major top area. If you did, and to the downside, this is a double. Because then why am I going to such a short-term time frame? Because we're getting very overextended, and I want to see what happens with this double. What's interesting with this double is its triggers below the peak. And it would be out of the way of the daily rotation zone, so it would be into the daily rotation zone with a gap. So I would be paying very close attention if this does trigger. Okay, so if you're trailing, that's a great. If you aren't trailing at a higher level, I mean, there's warning signs before that, especially about 288.95. See this little area in here? So if I was trying to trail more aggressively, that would be the key area. I'd watch for a close below. And then the key, really bigger, if you've been in it for a longer time, you're trying to hold it longer, you get a close below this 276.40. You triggered a double with the second target right in front of the gap play fill. And you see here, all that does is take it into the rotation zone and fill the gap. And take it back to this key resistance level right in here. Now, your high level is before. So if it wants to bounce off there and rotate up, you got that. But even look, you got, and I'd probably a little more aggressively lower stops. Here's the level I'd lower stops at, this little gap down area. So if this triggered, I'd be using this to front run the little stop lowering in case it does. In these market environments with playing the go gadget stuff. Why? Because you have a minor significance here with that key close and this reversal from that open right there. So I'd use that even in front of this 263.46 to lower the stop and take some risk away. But those are the targets. Your next major target, if this continues in go gadget mode, you get above 305, this doubles off the table, and then your next major target is 324.72. I had a coworker who only buys crypto tell me that people are foregoing first-time home ownership to purchase rare NFTs that have gone down in price from last year. Well, did you see also? I mean, we're actually in insane markets. Insanity. I'm just pulling something out of from earlier. Let me see if I can find it. Stick with me 1 second. We are with absolute insanity back in the markets, and I'm not saying that because I have a long-term bearish pattern. It's just I thought we were in absolute insanity last summer with the call buying and just the juicing up the crapcos, but we've returned to juicing up the crapcos. I'm just looking for something here. If I can't find it soon, I will bring it up for later. Where is it? Sorry about that. I wanted to try to find it. Essentially, you have pension funds play here. Look at this. Here's how bad it's gotten again. Oh, I'm sort of parched. Drinking my iced tea. Fairfax County Retirement Systems recently gained approval from its board of trustees to begin investing in yield farming, which investors lend out their digital tokens to crypto projects in return for a fixed stream of payments. Okay. How many crypto things have blown? Look at Celsius and all this other stuff. You know how they're lending out these fixed payments? They're actually using leveraged crypto trading to do it. So now you're having retirement pension funds getting into yield farming in the crypto market. I mean, that's more insane than trying to foregoing home ownership with at least you have a tangible asset to buy rare NFTs. which have no tangibility whatsoever, technically. I mean, if I'd rather own physical art that was rare, not a rare NFT. We're back. I mean, literally, we are back into the go-go juice mode. Let's put our pension fund to harvest. Like literally, you can't find any better investments, literally, than trying to farm yield in the crypto market, which has already had major blowups. Q, where's the Q for TomTom? I'm surprised TomTom hasn't jumped on. Maybe his ears are burning. Oh, weren't we supposed to hit 420 yesterday and today and the day before? Maybe we'll hit it tomorrow. So yeah, we're back to Jake. Yeah, we're still in total insanity, and this is not going to end well for a lot of people. Thank you for taking me out. Let's see how it plays out, because everybody knows that it's a bad company. We all know how the markets can act, and everybody knows the same thing. I don't think everybody knows that there's a lot of people like me that think it's going down long term. But again, we have the go-go juice insanity still going on. There's going to be a day of reckoning for a lot of these companies. I mean, we're still at, you know, I mean, you look at the. I mean, you actually have. Well, yeah, you have a little beat here, but another company, Yellow Corporation, up massively, 42% on a slight earnings beat. Everybody's piling into this stuff. They don't make money yet, and they're probably not going to for a very long time. But let's just bid it all up and ramp into it. Because you know what? It's actually wonderful, because there will be a lot of good shorts coming up again. But we're back in the go-go phase. Sorry to keep lift Carvana. And you know what? There's another thing. Carvana is a joke of a company, by the way. Did you know the amount of garbage and fraud in this? By the way, this turned into a triple, so don't pay attention to that double target. It became invalid. Carvana beat? Well, not according to this. According to Carvana here, they surprised the downside by 21% and huge mission revenue. Now, of course, they're up. What, they give forward guidance? I haven't gone through that yet. Let's just see if anything pops up on that. But what another crap go. You want to talk about baking the books? Oh my god, when that unravels. That's good, but this is where we are. Now, Lyft looks like it did beat. So they reported 13 versus estimate of -4 and beat on revenue. And so they're up just a little bit, but still trading in consolidation. I have no idea with Carvana. Rich. So if you have different results than me, please post them. You're welcome, Daniel. Mike, is a 10-year note head and shoulders pattern valid on IEF? I think it's horizontal neckline on the weekly. You guys are good. You guys are good. You guys are asking good questions. I applaud everybody here. It's technically a downward sloping neckline, so it's completely valid, Michael. You have to go from this is the left shoulder, head, right shoulder, neckline. And your neckline goes from the right end of the left shoulder to the left end of the right shoulder. And this is where it's triggered, so it was no redraw. Those are some nuances for people that know the way I teach stuff. So yes, that is, and it came back to kiss the neckline goodbye. Is that a guarantee a trade's going to work out? No, there are no guarantees trades are going to work out. But the probabilities are there. So I always stress manage risk first and let the ones that are going to go take care of themselves. So yeah, but this, I also put this in the longer term category. Remember, notes don't have to move that quick, although they've been moving quicker than normal. And your stop, your initial stop, so keep this in mind too. So this is where you got a position size. Your initial stop, which unless you have another key major area to reduce it, would not be until 107.60. Your major stop would be on a closing basis below 125. And then as you hit your stop levels, you're going to ratchet it up. I'm just going to keep an eye with this because this is a big counter trend play for potentially tighter stops on the futures and this should we have some significant reversal patterns. I took a 100 share short on AMD at 100 and it ripped go gadget 4 points higher. What did you have an entry signal or was it just because I didn't have a great topping pattern here yet. It came back to kiss the downtrend line goodbye. Again, remember, Amadeus, just something if you want to know something and it'll keep you out of, unless you have a really good topping pattern, which there wasn't here, I want to point something out. Remember on the most recent downswing, and you see it here, when you close above the 62.5, statistically with around 70%, you favor returning between the 87.5 and 100. I'm just going to tell you something that will keep you out of fighting a trend, and you're against the daily rotation zone without a strong topping pattern. So this can keep you out of short. Now, if we had a major double top that triggered, that'd be a different story. Because then you could have a short pattern for at least a pullback move. But when you don't have anything besides just an orderly pullback into the 4-hour rotation zone and against the daily rotation zone, with the odds above that 62.5 favoring this, the better short would be if you get a reversal pattern up here. The only thing going for you was you had a potential divergence, which you still have. But there's no great rollover play. So I'm just going to, maybe you can take that as a little thing that might keep you out of prematurely shorting some stuff. It would have been a whole different story had you not have closed above the 62.5 and you had been down in this area and you made a topping area, because then you wouldn't have statistically, until you closed above the 62.5, you wouldn't have statistically favored that higher price, but I still would have wanted some kind of topping pattern or breakdown play. Let me know if that makes sense, Amadeus. Again, in these markets, especially on the short side right now, you got to manage risk first, and you sit on your hands until we got great setups. You got to be patient with these. Is Beyond already up $5 post-market now? It's going to be by the crap. Is it already? Hey, look, it's bouncing back. This double is still in play, by the way. I mean, now, if it triggers the head and shoulders tomorrow, I would be unwinding it. But could this still go up? Sure. We're in Inspector Gadget Go-Go juice market. That's all I can say. And markets can be irrational longer than you can stay solvent. That's why we manage risk first. And I will be ready. I will be first one shouting from the rooftops once we start getting rollover plays. Like, can you check BNGO? I have no idea what. Bingo! Well, did you ask me to check these before? Because this is not one I watched, but coming up to that harmonic, pulling back to rotation zone. I know at this level it had to be for a key stop level. And then the rotation higher. At this point, closed above the 62.5. So I have to go with the stats to say, up to possibly 263, but I'd be a little cautious with a potential gap fill in the way. So I would not be chasing it higher now. I'd just be raising a stop if you're already long. And on that weekly, I just wanted to check in that 87.5 with that 50. So I'd be focusing really on the 87.5 of this prior major resistance. Should we still be getting up there? Now, you got to keep in mind is so if you're long already, I would be aggressively trailing a stop with weekly overbought and cycles at the top and daily overbought and cycles at the top. Earnings, did they come out already? It looks like it's down a little post market. So I don't have the earnings on here, but did they miss? Because I'd be watching for this gap fill with the rotation zone. Insanity is good. That's how we all learn. The higher it goes, the farther we fell. Great puts out. That's why I actually love these rallies and bear markets. But you just got to be picky because it gives you really great long-term entries again at much better reward to risk. You just have to be patient. Have to be patient. You were actually thinking of Tom today. ARC Holdings, Twilight, and Square go down for earnings, but ETF not budging. Again, it doesn't matter. We could beat our heads against the wall, but why? You care because you take the bullish short-term plays, you take the setups, and you just manage them within the long-term context of potential rollovers at some point. When I run out of stocks you like to follow, how do you find new stocks to track? I do. Well, normally I do fundamental scans. I do some fundamental scans first and try to find things with good fundamental setup, fundamental valuations, and then I go through all the charts, Daniel. I will literally go through 100, 200 charts. That's for longer term. So let's say we're in growth stock mode, like literally where we're getting the growth stock, where we're getting expansion of multiples, where we're in easier monetary policy. Then I'll run growth scans and look for nice growth setups, and those will mainly be continuation plays. Pullbacks, rotation zones, percent B entries within the context of the bigger trend. When we're in stuff like now, I try to find value plays, which that's what's ironic. There aren't a lot of great value plays right now. So it's just technical plays in the short term, but I will start, once we break down again, I will start scanning again for more value plays, stuff that has good, decent earnings, good cash on hand, a decent P to E, not overblown price to sales, stuff like that. And then I'll watch for setups, technical setups in those stocks. It just takes a lot of work. But what I do first is start with a scan, because that at least limits my universe. Hey, thanks, Pedro. Thanks for saying that. Hit that like button. I appreciate you being here. Are you a subscriber yet, Pedro? You're welcome, Amadeus. Yeah, that's a little thing with what I showed you with those harmonics. Is it perfect? No, but you literally, I like things where I can look at that with literally 30 seconds of analysis and go, without a pattern, do I want to short this? No, because statistically I have these kind of probabilities. So right there, it's like, okay, I don't want to trade against probabilities unless I have something to overrule those probabilities. So not putting it on. Just like I'm not going to try to call a bottom in a stock if it closed beyond uh, a key level. Okay? Same thing. For example, let me cite this one up just because I called it up earlier with earnings. And I'll show you where my levels, and then I'm going to call it, why am I going from this key lows? Because these are major consolidation lows just in front of the major juicing COVID lows, but these were our lows right before this. So I'm going with these lows right here. Not your all-time lows. That will be the next little thing. But even if you came back here, it would go to below the 62.5. But let me show you something here. Actually, let me even show you on the daily how nice these levels. So you came off these highs. By the way, this was technically and it still is even with this reversal, was a head and shoulders top. Might as well map that out too. It's just a very steep neckline. Shoulder, head, shoulder completely qualifies though. We'll just do a little teaching analysis. And then you go from where it broke. So you see here, all three targets within this is the move it was reversing, all three targets. So that was the first sign. What's the next sign? You're watching for at least a daily close below the 62.5. Look at this. Not yet. Not yet. What happened? There's your daily close. And if you want to err on the side of a little more caution, weekly close. So what do I start doing? Target the next harmonics. You can fine tune it, but the next harmonics are easy. 75% harmonic. Pretty much bounce there. We're still trading there. But am I watching for a long-term bottom here? No. Why? Because favors still a return to this area. Okay? And this is a money-burning crap co again. I mean, it's a legitimate company. But look at this. They've been around. They've been around since what, 2014? And you're telling me you still don't have a price to earnings ratio after all this time? You can't make money yet? Tell me how good a business you've been around for 8 years and you can't even get a price to earnings ratio because you have no net earnings? You have to keep financing debt? So not only fundamentally, but you got technically. So you think I'm looking, even if they miraculously got a PDE ratio coming up, you think I'm going to put a long-term position on here? No. Now, if I was actually interested in the company, you got back to this level, fascinating enough, with your harmonics, look, what's this? Major resistance shelf. Yeah, it popped a little bit above there, but then dropped below. But this is your most recent resistance shelf right at that 87.5 harmonic. So longer term, watching for a move here. Back down here. So is this something I want to load up my portfolio even on like a little pop here? You know, Oh, let's load up because it's going back to all-time highs. No. Why? Because statistically, if I'm going to load up there, I have to keep my stop below this area. And you think I'm going to load up on something with not a strong reversal pattern up here to go up to these absurd highs again on a crap losing money company when I'm going to have to keep my stop all the way down here? Let's even say I had to put it below that 100% level and got in where it's trading now. So that would be, 43 bucks. So from here, I'd have to go at least 43 bucks higher to get to one-to-one reward to risk. That's back up at over 100 bucks right here. When we have major breakdown zone even overhead above, forget it. That would be a joke of a setup. Why am I showing you this? Because you can do the same kind of analysis. Is it perfect? Could this thing go up? But if I'm doing my quick back of the envelope analysis looking for plays and I see this kind of run up, this kind of run down, close below 62.5, is that something I'm going to sit and study for 30 minutes to try to figure out if we have an entry? No. I'm going to go next, next, next. Let me know if that makes sense. Monkeypox stops are booming. Fantastic. Will you show my setup for what? My setup for scans? What were you asking, Connor? When you ask questions like this, you have to be a little more specific. Because I get back to questions. No, the SPY's not a double top. Oh, the SPY? I know the futures aren't. The SPY. No, the spiders aren't double top. This extended too far. This is too far now. You break below this low. You're into the daily rotation zone. You still have a gap here. I'd just be targeting, this is where you're in a clear path move. Where would I be targeting? Your breakout zone with the bottom of the daily rotation zone. So you don't need to use targets, but this is a key low anyways. You have two lows right here. You break below it. It's a short-term trade for me to the downside. You just don't have the double targets, but you're into a clear path, so you have easy targets. Fantastic. A 1,200 foot wide asteroid is coming for the Earth. What else could happen? Does that supersede monkeypox? Oh, come on, Pedro. You can subscribe. You can always unsubscribe. Try to get us to 5,000, Pedro. The other channels with streams mostly cover investing in options trades. Your context is great and actually helpful. And why I don't get into specific trades a lot is because I'm trying to teach people how to analyze stuff so they can set up their own trades based off different time frames and different strategies that they might want to utilize. Why, please do Amazon, and then I'm going to wrap it up pretty soon. Amazon, again, nothing's changed really. Your next key area is 144.74. Wouldn't be playing, again, on any breakdown. If you're looking real short, you're below about 142.30. You're watching longer term, I'd be watching about your 4-hour rotation zone. And you see here, it's just below this 139 area, which is pretty much, you start getting below that and below this support shelf, I'd watch for the retest of 134.05 and then the gap fill play. You get a close over to 62.5, you already know what I'm going to say. I'd be cautious, though, chasing this upside for the time being because you don't have a divergence there yet, but you are very overbought with cycles at the top on the daily, on the weekly. So do keep that in mind. So I'd have to use a much wider stop if I at this point. I'd rather wait for the pullback if for anything. I don't play these. I've looked at them before. Uh, I can't say I don't play them. I would consider playing them on a. I don't like to hold them for a long time because they naturally grind lower and they have a natural basis to unwind lower, even if your VIX is rising. But the kind of thing why I'm saying I don't normally play them because yes, would I consider playing a potential quick little double off of it? Yes. Would I be playing this for a long term position? No. I'll start shorting Tesla because Elon didn't deliver me my Cybertruck. When's the Cybertruck going into production? Bear better than beer? Is it ever? Hello, Lauren. Hey, Genomic. Close below rotation zone means close below the 21 EMA. Yes, the rotation zone is the 8 EMA and 21 EMA. A close below the rotation zone means a close into the rotation zone means a close below the in an uptrend. It would be a close below the 8. A close below the rotation zone means a close below the 21. You're welcome, Eric. A close below the 8 is a close into the rotation zone, not below the rotation zone. All right, with that, I'm going to wrap this up. It's just watch. Again, we got non-farm payrolls. By the way, on the Dow, we still have this double still on the bigger time frame on the daily. This is still one side. Even though you have two little tops in there, it's still one side. And that could be traded as a separate double within a double. It wasn't a rotation enough down, so that's considered one. If you want to learn how to do that, just look at your higher time frame also. If you can't spot it right there, that's a quick and easy cheat for it. But overnight, I'm not watching for much unless something shocking happens going into non-farm payrolls. Notes, by the way, we still have that inverse little head and shoulders. Not quite up to the first stop reduction like here, but this with this kind of little topping price action is a stop reduction for me getting so close up there. Again, fighting a longer term trend for this little mini pattern, not the bigger pattern. You have a little inverse within an inverse. Oh, how's your Kathy doing? This is the last thing. I mean, ARC still marching towards the stop reduction on the double. Down a little after hours, but nothing major. So we shall see. Kathy's still alive. All right. With that, thank you for tuning in. And I will talk to everyone tomorrow. Hopefully Bob can make it on to discuss non-farm payroll numbers at 8 a.m. Central tomorrow. With that, I will chat with everybody later. Have a wonderful evening. Bye for now.